Hi everyone, welcome to Difference Frames the World, a channel that offers you a unique perspective. Please subscribe and turn on the notifications so you will not miss our videos every day. Today, let's break down China's latest economic report, the one they call the Autumn Report. The numbers released on October 20th by the National Bureau of Statistics are solid, especially considering the global economic headwinds we're all facing. First, let us see the headline figure. Gross domestic product, or GDP. In the first 3 quarters of this year, China's GDP grew by 5.2% compared to the same period of 2024, which is 0.4 percentage points faster than the growth rate we saw a year ago. In raw numbers, we're talking about an economy now worth 101 trillion RMB, around 16 trillion US dollars, an annual increase of over 5 trillion yuan, nearly $800 billion. That's a massive addition to the economic pie. It may not be easy to imagine what an $800 billion increase means to an ordinary person. We can put it another way. The annual increase is roughly 25% of India's total GDP in 2024, which should be easier to understand. That is, 1.5 billion Indians need to work for 3 months day and night to create wealth equal to China's economic growth. Amid the global recession, what's really driving China's growth? Let's dig a little deeper. First, it tells us the factories are humming. China is producing more staff than last year and delivering more products to customers domestically and internationally. Second, we can also see a jump in domestic demand, which is crucial to China's growth. Total retail sales of consumer goods hit over 36.5 trillion yuan, roughly 5 trillion US dollars, a 4.5% increase. Even more interesting is that China's service consumption in the first 3 quarters, including travel, dining out, and entertainment, among others, increased by 5.2%. People are opening their wallets not just for goods, but for experiences. Investment, particularly in manufacturing, also saw a steady increase of 4.0%. Third, the unemployment rate in urban areas has held steady compared to the first half of the year, a sign of stability. Fourth, the core CPI, which strips out volatile food and energy prices, has seen its growth rate widen for 5 consecutive months. Policies aimed at boosting domestic demand and consumption are starting to bear fruit, and the country is emerging from stagnation. Fifth, despite trade tensions with the United States and global trade challenges, China's foreign trade has shown significant resilience. The total value of imports and exports grew by 4%, reaching 33.61 trillion yuan, an equivalent of 4.7 trillion US dollars. Over the past 3 quarters, the Chinese currency, RMB, has also remained stable, even appreciating slightly. Now, beyond just the growth rate, the real story here is the quality of that growth. The shift towards a more advanced, innovative, and sustainable economy is firmly on track. Look at the industrial structure. High-tech and equipment manufacturing now account for 35.9% and 16.7% of total industrial output, respectively. That's a big deal. It means the economy is moving up the value chain. The green transition is another major highlight. The share of non-fossil fuels in China's energy consumption rose by about 1.7 percentage points. That's significant progress in a relatively short time. And in foreign trade, there's a powerful new engine, the so-called New 3, electric vehicles, lithium-ion batteries, and solar cells. Their exports have been growing by double digits. It is a perfect example of how new industries are providing a strong cushion against weaker demand in traditional sectors. The vibrancy is also clear from some high-frequency data. The Manufacturing Purchasing Managers Index, PMI, a key leading indicator, rose for 2 consecutive months through September. Right after the National Day holiday in early October, prices for some key industrial products continued to rise. A vivid example of China's booming economy is the massive travel during the Mid-Autumn and National Day holidays. Nearly 900 million trips in the long week of vacation in early October, a huge vote of confidence in the economy from consumers themselves. Here comes the single biggest driver of growth in the Chinese economy, the consumption. In the first 3 quarters, the contribution of final consumption to economic growth was a whopping 53.5%. That means over half of the entire growth came from spending. This role has become even more important than last year. Why is this happening? Well, policy is giving a strong push. The government allocated 300 billion yuan in special treasury bonds to fund programs like trade-ins for old appliances and cars. This real money is helping people upgrade their stuff. The result is obvious. Sales of home appliances, office supplies, and furniture all grew by double digits. By September 10, 2025, over 8.3 million people had applied to trade in their old cars for new ones. That's like over 30,000 applications every single day. It's not just about replacing old things, it's about buying better things. Sales of high-efficiency and smart appliances are soaring, and service consumption is booming as well. Spending on culture, sports, telecoms, tourism, and transport all rose by double digits. People are craving experiences, and they're willing to pay for them. Another exciting part of the story is the surge in innovation. The combined effect of government policy and market forces brings forth high-quality, productive forces. High-tech manufacturing value added shot up by 9.6%, way faster than overall industrial growth. Production of industrial robots, service robots, and bullet trains grew by 29.8%, 16.3%, and 8.6% respectively. Robots are everywhere. For instance, China is making significant progress in brain-computer interface, BCI technology, challenging the United States' dominance in this field. With government backing, increased funding, and recent clinical advancements, Chinese companies are exploring a variety of approaches. Unlike Neuralink, which focuses on a single method involving invasive skull implants, Chinese firms are developing a diverse range of technologies. These include semi-invasive implants, interventional BCIs, and non-invasive wearable devices. Consider the example of a coin-sized semi-invasive brain-computer interface, BCI. This device is positioned on the surface of the brain, which lowers surgical risks compared to fully invasive methods.
In Beijing, this patient can speak again. Through a computer, she says, "I want to eat."
我要吃饭。
Her voice restored after a coin-sized chip was implanted into the top of her brain. The breakthrough chip is called Beina 1.
It has been implanted in several paralyzed patients, enabling them to control a computer cursor and navigate smartphone apps using only their thoughts. Chinese developers are planning a clinical trial involving around 50 patients set to begin in 2026. It isn't just happening by chance. Investment in research and development is paying off. China now has several general-purpose AI models that are internationally competitive. According to a recent Global Innovation Index, China broke into the top 10 for the first time, and it's home to 24 of the world's top 100 science and technology clusters, more than any other country for 3 years running. It is worth noting that the US has 22 top clusters, ranking second on the list. The coolest part is how this lab work is turning into real-world products. The output of 3D printing equipment and industrial control computers, for example, skyrocketed by 40.5% and a staggering 98.0%. The green transition is also an innovation story. The production of solar and wind power, new energy vehicles, and lithium-ion batteries for cars is growing at a blistering pace. Of course, we cannot forget China's AI. Since the government launched the AI Plus initiative, the technology has been woven into everything. It's making factories smarter, helping scientists make breakthroughs, and creating entirely new consumer products. In Shanghai, they're even pushing forward with humanoid robots, with one model already being delivered to a car parts factory. It is the future, happening right now. In a video published 3 years ago, we already stated that China's AI will be more penetrating and advanced than the United States, as the Chinese market is larger than the US market. Today, we still maintain the viewpoint. If we talk about the nominal GDP in US dollars, China's GDP is still behind that of the United States. Still, a really simple, hard to manipulate indicator of economic activity can tell us the truth. Look at electricity consumption. In July and August this year, for the first time in any country, China's total electricity consumption surpassed 1 trillion kilowatt hours for 2 consecutive months. That's mind-blowing. It tells us straight up that the machines are running, the servers are humming, and the economy is buzzing. In comparison, the United States electricity usage in July 2025 was around 407 billion kilowatt hours, roughly 40% of China's consumption in the same period. In China's developed provinces like Jiangsu and Guangdong, the growth in power usage is concentrated in advanced sectors like electronics manufacturing, data centers, and new energy vehicles. In another not-so-developed region, Anhui, a landlocked Chinese province, electricity consumption by the equipment manufacturing sector jumped 12.7%. China is moving up the value chain, as we often say, and it is no longer merely a cheap knockoff world factory. It is now making more high-end products. Power consumption data doesn't lie, but the nominal GDP in US dollars does distort the true picture by around 50%. According to GDP measured by PPP, purchasing power parity, China's total in 2024 was over 35 trillion US dollars, about 1/4 higher than that of the United States, remaining number one across the world. The Chinese government emphasizes that it has ample policy space and a toolkit ready to deal with any challenges, and that the foundation for hitting the full-year growth target is solid. Even international institutions are taking note. They point to the high innovative content of China's exports, like the new three, as the source of its trade resilience. They also see the domestic consumer market, with its trend towards diversification and upgrading, as a powerful and durable new engine for growth. To sum it all up, China's economy in the first 3 quarters of the year 2025 has shown remarkable resilience. It's not just about hitting a 5.2% growth number. The real takeaway is how it's growing. The engine is shifting from old smokestacks to consumption and innovation. The new three are conquering global markets. The Chinese AI is transforming industries, and consumers are spending confidently on both goods and services. The green transition is accelerating. All of this paints a picture of an economy steadily retooling itself for a more sustainable, high-quality future. China is not perfect, and the Chinese economy has many challenges. Still, the country can stun the world with more remarkable progress in the years to come.